The US dollar is soaring, hitting the highest levels it's seen in several years. It's looking like future rate cuts are becoming less and less likely. And according to Investing Haven, speculators are giving up on silver. Is there light at the end of the tunnel, or will silver price continue to be crushed lower? That's what I want to talk about in this video. Let's get into it. Buy your gold and silver online from SD Bullion. New customers get gold or silver at spot by visiting sdbullion.com/new. Thank you so much for watching. I do sincerely appreciate it. Here we are looking at silver price currently sitting at $29.81. It is down 72 cents for the day. But when we look at the year-to-date chart, I want to point out silver started out the year at $28 and change. It went up to over $30 an ounce last week and has since come down, but we're still up about $1 on the year. So silver is doing fairly well, all things considered. When we take a look at gold, you could see gold has a very similar pattern. It started out the year around 2620, moved all the way up to above 2700 intraday, closed the day out at 2689 last week, and is moving lower. However, for the year, gold is still up. So even though gold is down almost $25 today, it's still better off than it was on January 1st. Last Friday, the U.S. Department of Labor put out a statement giving us the December jobs report. And check this out. They say today the Bureau of Labor Statistics reported that the American economy added 256,000 jobs in December, well above market expectations and reflecting a robust and resilient labor market. With unemployment ticking down to 4.1% and the 3-month average of payroll employment gains at 170,000, this report underscores the strength of our economy as we close out 2024. So it was a strong jobs report, and this is what caused the dollar to surge. In fact, earlier this morning, the US dollar index went over 110 points for the first time in several years. You got to go all the way back to November of 2022 to see a dollar as strong as it is today. So with the dollar continuing to gain strength, this is putting a lot of pressure on precious metals, and it's why we're seeing lower prices today. Now, these economic reports that are coming out, combined with the strength of the dollar, are certainly having an effect on the probabilities for rate cuts in future Fed meetings. If we look at the FedWatch tool by CME Group, you can see here they're predicting a 97.3% chance that rates are going to remain the same at the upcoming Fed meeting on January 29th. And if we fast forward all the way to December of 2025, you can see they're predicting a 29.5% chance that rates will still be where they're at today at the end of the year, albeit over a 70% chance that rates are going to go down, but it is still possible that we're not going to see any rate cuts at all in 2025. Now, I don't think there's any reason to start panic selling your silver right now. In fact, if prices do continue to come down, this could create a great buying opportunity. But look, there's more than just rate predictions and the strength of the dollar that affect precious metals. Let me remind you, gold is still near an all-time high. Silver is still at multi-year highs, even with the dollar being incredibly strong. So we have to look at other things as well. We need to factor in geopolitical issues, including wars, and also inflation. Remember, inflation is not dead. Let's look at the economic reports coming out this week. On Tuesday, we've got the producer price index, but on Wednesday, we're going to have the consumer price index come out for the month of December, and it's actually forecast to be higher than the previous month. So inflation is not dead. This is definitely a big factor when it comes to precious metals, but there's one other thing that I haven't talked about yet. It was recently highlighted over on BNN Bloomberg. Take a listen.
Daniel Galley is our next guest. He's Senior Commodities Analyst at TD Securities. Daniel, thanks a lot for coming in.
Yeah, thank you, Paul, for having me.
Tell us about this. This is an interesting concept that tariff threats, and we know where they're coming from, and we know the possibility of response from other countries, including Canada, are disrupting the markets for precious metals.
Yeah, absolutely. I mean, it's hard to see it in flat prices, but over the last month, there's been a huge disruption in precious metals markets where the threat of universal tariffs on metals is leading traders around the world to bring metal in from London and other global venues into the US, only to hedge against the risk that tariffs will be implemented on precious metals. Historically, they haven't. Precious metals have been considered money in effect. But if they were to be considered or subject to tariffs, then traders holding short positions against metal that they actually hold somewhere else in the world would be subject to a substantial loss. And in order to hedge against that risk, they're bringing metal into the U.S.
This is physical metal coming into the U.S., is it?
Absolutely,
Right.
yeah. And what's interesting here, Paul, is that it can inadvertently lead to a stock out in the world's largest metals vaulting system for silver in London. Right, this is the biggest story in commodity markets right now, I think, is that silver markets seem to be just completely sleepwalking into a potential stock out.
And what's a stock out?
Well, a stock out is a moment in time where the inventories of the metal cross a critical threshold below which the microstructure is challenged, right? And so if you think about how the world trades precious metals, physical precious metals, the global venue for that is actually sitting in London. But most people actually use US-based contracts to hedge price risks. So the challenge here is that the threat of universal tariffs is leading metal to go from the world's largest venue into the U.S., depleting that inventory buffer that traders use for over-the-counter transactions every day. And mind you, we're now in a fourth consecutive year of very substantial deficits in silver. And so this trend of depleting inventories was already set up. And this is simply something that's accelerating that process.
So this sounds price positive for silver in particular. Is that correct? And we're seeing silver trade at about $31 US right now.
Yeah, absolutely. I think there is the potential for explosive price action in silver if we do meet that critical threshold. We've seen glimpses of this in other commodities over the last few years. If you recall, copper last year had a very substantial rally on a similar theme. In previous years, palladium was a really good example of a market with a similar setup. And silver markets today just appear to be completely sleepwalking into this setup.
What do you mean by sleepwalking? That the price is not reflecting this this stock out possibility, this possibility that in physical inventories will get to a critically low level?
Yeah, the price is certainly not reflecting that. I also think that it's a very undercovered story.
Right.
So this is something that could potentially be very significant, but macro investors are just completely flat in silver markets, and nobody's really paying attention to this.
So do you have a call on silver, on the silver price?
Yeah, we think silver is going to end the year closer to $40 an ounce. So the substantial gains from today's prices.
Wow, $40 silver and a potential stock out in 2025. Now, that's a term I'd never heard before, but basically they're saying that silver levels will get so low that it's going to disrupt the trading. And we do know that silver spot price goes off of the paper trading, so we could see higher prices for silver in 2025 for sure. But when it comes to the actual amount of silver available out there, there are differing thoughts on this, and I've talked about it in previous videos. I don't think the world is running out of silver. I mean, we are still mining silver today, and this year we're probably going to mine another 1 billion ounces of silver around the world. So sure, there's not a lot in these above ground stockpiles, maybe 1 or 2 years worth, but the rate of consumption is more what I think people should be looking at. And I do think that it's possible that tariffs could play a role in higher silver prices this year or over the next few years, but I don't think that silver itself is going to get a tariff placed on it. That would be quite extraordinary. I don't think that's happened before, at least not in recent history. I mean, a tariff on money coming into the country sounds pretty wild, so I'm not going to speculate on that too much, but I do want to look at this article here by Investing Haven. They say that speculators are giving up on silver. They also say why this is great news for long-term investors. Why is this happening? They say silver has been unusually choppy since April 2024. Silver has seen steep rises and declines since then. then, there has not been a real trend in the silver price, certainly not for traders that hold highly leveraged positions, meaning their time frame cannot be too long. The great news, if speculators or dumb money are giving up, the smart money is taking notice. Interesting. They believe that the smart money is onto something big in silver. They are accumulating silver even on the recent soft silver price rise, which admittedly has been very soft. Speculators have been exiting their long positions. They go on to say that they are firmly bullish on silver in 2025 and beyond. And I do have to agree with them about being bullish on silver. I certainly am bullish on silver. I know that inflation was not curbed. Inflation is not over. It's going to continue. And if given the choice between holding dollars or holding real money, I'm going to choose real money every single time. Now, I am curious on your thoughts regarding silver price. Where's it going to go in 2025? Feel free to leave your thoughts down below in the comment section. Thank you so much for watching, and I will see you all in my next one. Silver Dragons out.